Now, the Fed widely expected to cut interest rates by a quarter point this evening, but much of the attention ahead of this week's FOMC meeting was focused on who would be voting, with Lisa Cook fighting to keep her job, while President Trump's nominee, Stephen Miron, was fast-tracked onto the board. Now, with us now is Jim Bianco, president and macro strategist at Bianco Research. Jim, so happy to see you. The perfect day to speak to Jim Bianco. I mean, when you look at central bank independence, but the fact that now you have both Lisa Cook and Steve Miron voting, does that kind of like flaw what we're looking at this evening?
No, I don't think it does. I think the Fed is set to cut interest rates by 25 basis points at the meeting. The drama, if you would, at the meeting is going to be how many dissents they're going to get. There's a case to be made that there might be one dissent, and that would be Stephen Miron asking for 50 basis points or more. There's a case to be made that there might be 6 dissents. That would be 3 dissenters for more than 50 basis points would be Miron, Waller, and Bowman, and possibly as many as 3 dissenting for no move at all. So it could be anything along the way. But the bottom line is they're going to cut rates 25 basis points.
Well, yeah, the bottom line is that maybe 25 basis points. But actually, if there's, dissenters asking for 50, maybe that's where the market then goes to next. What do you think happens from after tonight to the end of the year?
Yeah, that's going to be the big question during the press conference is where do they go?
Exactly.
Because if we get those dissenters on the other side saying we don't want to move today, that could be a break on the idea that we would get another move in October and another move in December. So that's really the open question. We know we're going to cut today. We'd like to hear from them why they're cutting and maybe get some kind of guidance as to what comes next.
Yeah, I mean, look, the dollar is at its weakest since early 2022. There's a number of people saying that, the S&P is overvalued. Like, what are we missing in some of the conversations? How politicized is the Fed?
They're very politicized right now, and I think that would show up with the dissents. But I think the biggest thing we're missing is we talk about this low payroll growth in the U.S., 29,000 jobs over the last 3 months, 22,000 jobs in August. But what we don't talk about is how many jobs should the U.S. be making. That's largely a function of population growth. And with population growth is about immigration. And with the border closed and with deportations up, there's an argument to be made that the population growth in the U.S. is the lowest in approaching 100 years. And if it is, we might only need 30,000 jobs a month in the U.S. So we don't have the labor slack that we think we have. And if the Fed's going to be cutting rates into this, assuming that we need to be creating more jobs, they might just be creating more inflation. And that's the risk. And that's kind of the thing we need to discuss that we're not. Everybody's afraid to discuss it because it's Trump's signature achievement, and they don't want to get on his bad side by saying, that maybe closing the border is a bad thing for the economy.
But is there any work around that?
It's hard to say because the Fed can't open the border. You could also argue that it's okay if we have slower population growth if it's from immigration. But then we need to adjust our thinking that maybe 30,000, 20,000 jobs is fine. But we're not there yet. Everybody's looking at these jobs numbers and saying they're bad because they're looking at historical reference points when we would have millions of people coming into the country a year as opposed to practically nobody coming into the country right now.
Jim, when does the AI, I don't know whether you want to call revolution or actually show up, the investment that is going into AI, where does it show up in numbers?
It will show up in the numbers probably in GDP because of the build-out. GDP is production and building out in the production. Will it show up in the companies that are spending the money, getting it back in revenue? Probably not. Bill Gates had a famous line about the technology in the late 1990s about the Internet, that over the next 2 or 3 years it'll deliver less than you think. And over the next decade, it'll deliver more than you think. And I think that precept will apply with AI. I am a big believer in AI. I think it will be as big as the Internet, but not in 26 or 27. It might be more of a 2030 and on story.
Jim, and when it comes to financial conditions, it does seem that the Trump administration basically wants to ease financial conditions for anyone around the world who needs to finance in dollars. It seems basic, but is that a fair assumption?
Yeah, I think it is a fair assumption. And on the flip side of that, they've got those easy financial conditions. We got an all-time high in the stock market. We have interest rates falling in the U.S. That's part of the reason that the dollar is coming down is because our interest rates are coming down. I think it's interest rate differentials that is driving it. We've got low volatility in the U.S. So you've got about as easy financial set of conditions that you've had any time in the last couple of years right now in the U.S.
I mean, the damaging trade war seems to almost have vanished from investor expectations. Is that, is that because they're focusing on the wrong thing? Are they at least mindful that inflation could go up, or are we seeing a bit of tunnel vision?
Yeah, I think it's more the tunnel vision thing. The first in April after Liberation Day, everybody said, wait till you see the inflation that's coming. It didn't materialize. And then they said it's not going to come. And I've been saying, wait till the spring. I think that you will see that those prices were going to be filtering through. The reason it's been so slow with the inflation is there's still a lot of stuff on the shelves that was brought into the country before tariffs. But once that inventory of pre-tariff stuff is worked off and we only have tariff inventory left, I think you're going to start to see prices move up. So probably spring into early part of the summer, I think you're going to see goods inflation much higher than it is right now.
Talk to me about the Mara Lago Accord. How much of that has actually been achieved?
I think most of it has been achieved. The idea that we were supposed to get Europe to pay 5% of defense, maybe the possibility of a sovereign wealth fund. We're seeing that with the Intel merger, Intel agreement, and possibly with TikTok and some of the other agreements as well, too. And as far as, the rest of the Mara Lago Accord about a reorientation of the global trading system driven by tariffs, it's largely happened. We talked about it a lot in the spring. We don't talk about it now because it's kind of there now. It's what we're doing.
But so what does it mean? I mean, there was so much anxiousness in the markets about repercussions, second round, third round effects. Have, exporters now absorbed some of the costs? It seems to have normalized. And I'm not sure whether it's because something ugly happens and everything's been delayed, or whether actually we were just much more supple than we thought.
Yeah, I think early on, you saw some exporters, both exporting countries and exporting companies, absorbing the cost of higher tariffs. But that was probably a 30, 60-day phenomenon in April, maybe into April, May, and June. And now because they didn't understand tariffs initially, so they were afraid and were protecting market share. But now that they're starting to get an understanding of them, I think you're going to start to see them start to push those prices back through. And that's why I think it's ultimately going to come back through in higher prices in the United States by, say, spring or early summer.
Jim, where do you see the U.S., and when you look at the U.S. economy now and you see it in a year, given what you said on employment, and the real question is actually how much, employment could we have, what else do we get wrong?
I think the inflation story is another one that we're looking at. We're 5 years past reopening the economy, not even the lockdowns, but reopening the economy, and we still can't get core inflation under 3%. So all this talk that we've got inflation solved, inflation fixed, these numbers that we currently have now, if this was pre-COVID, would have been a wholly unacceptable set of numbers and a wholly problem of inflation. But now we're saying that this is victory. I still think we're in a stickier inflation world, not an 8-10 Zimbabwe world, but more like a 3-ish% inflation world. But that gets to Donald Trump's, famous thing that he wants interest rates at 1%. If we're in a 3-ish% inflation world, maybe about 4% is around fair value where they should be, and not where they should be, where he wants them to be around 1.
Do you think we should change the mandate of the Fed?
I don't know if that necessarily has to be the case, because the Fed is unique with its dual mandate of, keeping employment as high as possible and keeping inflation as low as possible. I would be in favor of maybe pushing the Fed towards only the dual mandate, because you always hear people talking about the third mandate being financial stability or something else. And I think that that's where the mission creep comes in with the Fed. But if we were to say, no, these are the only two things you need to do, don't worry about these other things, that would probably improve the Fed.
Jim, I know you spend quite a lot of time also thinking about, the energy complex, what's happening with oil, and that seems to be really bifurcating. It's people say, look, we're in a supply glut. Others saying that the complete reverse. Many question marks about China. Does it just feel we're focusing so much on the U.S. economy, but actually does the rest of the world feel quite uncertain?
Yeah, it does. I mean, it looks like, Europe is much weaker. We've got an issue with oil right now. Because of the weakness of the rest of the world, we have oil prices down. And then you've got the uncertainty that we're talking about trying to get, Russia back to the table to get a peace deal with Ukraine. And the only real leverage that we have would be to sanction the energy industry in Russia. But nobody wants to do that because nobody wants higher energy prices. So we're kind of caught in there. And then the oil market, ironically, has not been doing a whole lot of anything. It's been meandering sideways with low volatility during all this uncertainty, but I think it's getting set for a break one way or the other. If I had to guess, I'd say it would be higher.
Jim, I'm not sure what to do with China. So we have these headlines, a Bloomberg red headline, which means that it's an important one. China is telling tech companies to stop buying NVIDIA's AI chips. Now, this is according to the FT. So we see the two presidents, President Xi and President Trump, wanting to get on the phone, possibly a summit before the end of the year. But then you have, especially on semiconductors, these kind of like loggerheads. Does that have a meaningful impact?
It can have a meaningful impact because NVIDIA is the leading edge right now of the AI revolution. Their Blackwell chip is really what has been pushing everybody into these data centers, that's been giving us the AIs that we've all been using. And now they've been getting, caught up in an issue with China because China wants to buy some of those chips, and we won't let them buy the highest end chips. And now that they're starting to push back on saying NVIDIA's got difficult trade practices. Jensen Huang is with the president at the state dinner tonight. I'm sure they're talking about it. He's going to talk to Chairman Xi at the end of the week. And this is kind of coming to a head right now. What's going to happen with NVIDIA and what is going to be the policy between the U.S., China, and NVIDIA?
Are you going to the state dinner?
No, I'm not.
It's the place to be, Jim.
I know,
we need to get an invite. Jim Bianco, president, macro-strategist at Bianco Research. Now, let's bring you some other stories making news today. Thank you, Jim.